Breaking banking developments in 2026 are putting both the Iraqi Dinar and Vietnamese Dong back in the spotlight, and if you are holding IQD or VND, there is one part of this story you should not ignore. The biggest question isn't simply whether a new exchange rate is coming. The bigger question is whether the banking systems behind these currencies are becoming more modern, more regulated, more digital, and more prepared for a changing financial environment. For years, Dinar and Dong communities have focused heavily on one question: when will the revaluation happen? But while people have been watching exchange rate rumors, another story has been developing. Banking reform, financial regulation, digital payments, foreign exchange management, anti-money laundering requirements, customer verification, international banking relationships, and stronger financial controls. These developments may not sound as exciting as a headline announcing a new currency rate, but they are extremely important if you want to understand where the financial systems of Iraq and Vietnam are heading. And that brings us to the question everyone wants answered. Do these new banking developments mean an Iraqi dinar or Vietnamese dong revaluation is finally getting closer? The honest answer is that banking reforms alone do not confirm an RV. There is no responsible way to claim that a specific new rate or specific revaluation date has been officially confirmed simply because banking regulations are changing. But that does not mean these developments are unimportant. In fact, they may tell us something much bigger about the direction of the financial systems supporting these currencies. Let's start with Iraq. The Central Bank of Iraq has been working through a broad banking sector reform program designed to strengthen and modernize Iraqi banks. This involves issues such as bank capital, liquidity, governance, financial reporting, restructuring, mergers, and regulatory supervision. That matters because a modern monetary system needs strong financial institutions behind it. A currency isn't just a piece of paper. It operates through banks. Businesses use banks. Government payments move through banks. International transactions move through banks. Foreign currency is exchanged through banks. And increasingly, digital transactions are processed through banking infrastructure. So when the banking system changes, the currency environment can change with it. But here's something important. A stronger banking system does not automatically mean a stronger exchange rate. Those are two different things. A bank can become better capitalized without the currency being revalued. A country can introduce digital payments without changing its exchange rate. A central bank can strengthen financial regulations without announcing an RV. So we need to separate the real banking reforms from the speculation surrounding them. One of the most important areas in Iraq's banking transformation is bank capitalization. Banks need sufficient capital to absorb losses and remain financially stable. Strong capitalization can increase confidence in financial institutions and help banks operate more effectively. Iraq has been pushing its banking sector toward stronger capital and regulatory standards. And this is important for another reason. If Iraqi banks want deeper relationships with international financial institutions, they need systems that can meet modern banking expectations. International banks care about compliance. They care about transparency. They care about risk management. They care about customer identification. They care about the source of funds. And they care about whether financial institutions can properly monitor transactions. This is why banking reform can become such a significant part of Iraq's economic story. Imagine an Iraqi bank trying to process a large international transaction. The bank needs to know who the customer is. It needs to understand the purpose of the transaction. It may need documentation. It may have reporting obligations. And depending on the transaction, additional compliance checks may apply. That isn't something unique to Iraq. That's simply how modern regulated banking works. And this is especially important for currency holders. If someone holds a large amount of foreign currency and eventually wants to exchange it through a legitimate financial institution, they should not expect the process to be completely informal. A bank may ask questions. It may request identification. It may require documentation showing the source of funds. It may apply transaction limits. And it may conduct enhanced due diligence if the transaction is unusually large or unusual for the customer. That's not necessarily a warning sign. It's part of the modern banking environment. Now let's move to Vietnam. The Vietnamese Dong operates within a very different economic structure from Iraq, but Vietnam is also going through financial modernization. Vietnam has become deeply integrated into global manufacturing and international trade. Its economy depends heavily on exports, imports, foreign investment, and international financial flows. That means banking and foreign exchange regulations are extremely important. Vietnam has been updating its financial regulatory framework, including areas connected to banking supervision, anti-money laundering controls, digital financial activity, and foreign exchange management. For VND holders, this is important because foreign exchange is directly connected to international commerce. Companies need to receive foreign currency. Businesses need to pay international suppliers. Investors need to move funds. Banks need to manage currency exposure. And financial institutions need systems that can monitor these transactions. So when banking rules change, the effects can go far beyond the banks themselves. They can affect businesses, consumers, investors, and currency transactions. But once again, we need to be careful. A banking regulation is not automatically a currency revaluation. This distinction is critical. You may see social media posts saying something like, "New banking rules prove the RV is coming." But that conclusion requires much more evidence. Banking reform can create a stronger financial infrastructure. It can improve transparency. It can improve payment systems. It can make banks more efficient. It can strengthen international relationships. But none of these developments automatically means a currency is about to receive a dramatically higher exchange rate. If an actual revaluation occurs, the evidence should eventually become visible through official monetary policy. That's why the Central Bank of Iraq is so important for IQD watchers. And Vietnam's State Bank is important for VND watchers. If a major exchange rate policy were introduced, there would need to be official instructions. Banks would need to know the new rate. Financial systems would need to recognize it. Accounting systems would need to be updated. Payment systems would need to reflect the change. Businesses would need guidance. And international financial institutions would need accurate information. That is why a real currency event cannot remain only a rumor circulating on social media. At some point, the banking system itself would have to implement it. Now, let's talk about digital banking. This is another area that is creating a lot of excitement. Around the world, banking is becoming increasingly digital. People are using mobile banking. Electronic payments are growing. Digital identity systems are becoming more important. Banks are using automated compliance systems. And financial institutions are becoming more dependent on technology. Iraq is also moving toward greater use of electronic payment infrastructure. Vietnam has similarly been expanding digital financial services and strengthening customer verification requirements. For ordinary customers, these changes can make banking faster and more convenient. But from the perspective of the financial system, there is another benefit. Digital transactions create better records. When payments move electronically, financial institutions can more easily track transactions. Governments can potentially improve revenue collection. Banks can improve fraud detection. And regulators can gain better visibility into financial activity. This is one reason digital banking matters. It isn't necessarily an RV signal, but it is part of the modernization of the financial infrastructure. And that infrastructure matters if a country wants to become more deeply integrated into the global financial system. Now think about this from the perspective of a currency holder. Suppose you have a large amount of IQD or VND. You may be thinking about what happens if the exchange rate changes dramatically. But before worrying about the hypothetical rate, you should think about the actual banking process. Where would the currency be exchanged? Would the institution accept physical notes? What identification would be required? Would there be documentation requirements? Would there be transaction limits? Would the bank need to verify the source of the funds? Would the transaction be subject to reporting requirements? These are practical questions, and they are often more important than the rumors circulating online. This is why banking reform could matter to currency holders even if no RV occurs. The stronger and more modern the banking system becomes, the more structured the process of exchanging and transferring money may become. Another major topic is high denomination currency. Iraqi dinar holders often talk about 10,000, 25,000, and 50,000 dinar notes. Some people interpret discussions about these denominations as evidence that a major currency change is coming. But a denomination is not the same thing as an exchange rate. A country can have high denomination notes for practical reasons. A central bank can change the structure of physical currency without changing the international value of that currency. So don't automatically interpret every discussion about banknotes as an RV signal. Now let's talk about another word that creates confusion: digital currency. You may hear people talking about a digital dinar or digital dong. But digital payments, digital banking, and a central bank digital currency are not the same thing. A country can have widespread electronic payments without having a central bank digital currency. A banking app doesn't automatically mean a digital national currency, and a digital payment system doesn't automatically mean a new exchange rate. Understanding these differences is extremely important. Otherwise, every banking announcement can appear to be an RV announcement when it isn't. Now let's return to the bigger picture. Why are banking systems around the world becoming more regulated? Because international finance has changed dramatically. Banks are expected to know their customers. They need to monitor transactions. They need to prevent fraud. They need to comply with anti-money laundering requirements. They need to manage financial risks. And they need stronger technology. Countries that want deeper connections with international finance need banking systems that can meet these standards. This is particularly relevant to Iraq. For years, one of the major challenges facing the Iraqi financial sector has been modernization. Strengthening banks can help Iraq improve financial stability and potentially improve relationships with international institutions. It can also support investment and economic development. And for Vietnam, modernization is equally important because of its growing role in global trade. Vietnam's banks need to support an economy that is increasingly connected to international manufacturing, exports, foreign investment, and global supply chains. So both countries have reasons to modernize their financial systems. Now here's where the RV theory comes back into the conversation. Some currency watchers believe that banking reform must happen before a major currency revaluation can happen. There is some logic behind the idea. If a central bank changed the exchange rate framework significantly, banks would need to be ready. Their systems would need to process the new rate. Businesses would need instructions. International banks would need information. Payment systems would need updates. And customers would need clear guidance. So yes, a modern banking system could make a major monetary change easier to implement. But the important word is could. It doesn't mean the reform itself proves an RV is scheduled. That's where speculation becomes different from evidence. And if you are following IQD or VND news, learning that difference can protect you from a lot of misinformation. So what should you actually watch? First, watch official central bank announcements. Second, watch official exchange rate publications. Third, watch actual banking implementation. Fourth, watch regulatory documents. Fifth, watch international banking developments. And sixth, watch changes in foreign exchange policy. Those are much stronger signals than screenshots, anonymous messages, or social media claims. If somebody says, the new rate is already active, ask a simple question. Where is the official confirmation? If somebody says, banks have received the new instructions, ask. Which banks? Where is the documentation? If somebody claims, the RV is happening tomorrow, ask. Which central bank announced it? Those questions are important, because when it comes to your money, excitement should never replace verification. There is another issue currency holders should think about. Scammers know that people are interested in IQD and VND. That means fake exchange services, fake redemption centers, fake banking representatives, and fake rate announcements can appear online. Never send money to someone simply because they promise access to a special exchange rate. Never provide passwords, PINs, banking codes, or sensitive financial information to an unknown person. And never assume a message is legitimate just because it contains a bank logo or uses professional-looking language. Real financial institutions have official channels. Use those channels. Now let's bring everything together. What we're seeing in 2026 is a broader movement toward stronger banking infrastructure. Iraq is working on banking reform. Vietnam is continuing to refine its financial and banking regulations. Digital payments are becoming increasingly important. Customer verification is becoming more sophisticated. Anti-money laundering controls are becoming stronger. Foreign exchange management continues to evolve. and international banking relationships remain critical. All of these developments matter. But they don't automatically confirm an RV. The strongest conclusion we can make is that the financial systems supporting IQD and VND are continuing to evolve. And that evolution could become increasingly important for currency holders. If an actual revaluation happens in the future, the biggest signal won't be a viral YouTube video. It won't be a Telegram post. It won't be an anonymous insider. It will be official policy. The Central Bank of Iraq would need to communicate its decision. Vietnam's monetary authorities would need to communicate any major exchange rate policy change. Commercial banks would need to implement the policy. Financial systems would need to reflect the change. And international financial institutions would eventually recognize the new framework. That is what real confirmation looks like. So don't watch only for the headline saying, RV confirmed. Watch the banking infrastructure. Watch the regulations. Watch the central banks. Watch foreign exchange policy. Watch digital payments. Watch international banking. And watch the actual official exchange rates. Because sometimes the biggest financial story isn't the headline everyone is waiting for. Sometimes it's the infrastructure being built underneath it. And that is why these banking developments deserve attention. For IQD holders, Iraq's banking reforms could be important because they are helping shape the future of the country's financial system. For VND holders, Vietnam's continued regulatory modernization matters because the Dong operates inside an increasingly sophisticated global trade and financial environment. But in both cases, the same rule applies. Banking reform is not the same as revaluation. Digital banking is not automatically a digital currency. A new regulation is not automatically an RV. And a rumor is not confirmation. The smart approach is to watch the evidence. Look for official documents. Look for actual implementation. Look for consistent information across credible sources. And never make a financial decision based solely on a viral claim. So, are the new banking developments worth watching? Absolutely. Could they become part of a bigger financial transformation? Possibly. Could they eventually support an environment in which major monetary policy changes become easier to implement? That's possible too. But whether an Iraqi dinar or Vietnamese dong revaluation actually happens, at what rate, and when, can only be confirmed by the responsible monetary authorities. Until then, the best strategy is to stay informed, separate facts from speculation, and watch the financial system itself. Because when the real signal comes, you won't have to depend on a rumor to recognize it. The banks will know. The official systems will know. The published rates will show it. And the financial world will eventually see it. If you found this update useful, make sure you like the video, subscribe to the channel, and turn on notifications for more Iraqi dinar news, Vietnamese dong updates, CBI developments, banking reform, currency analysis, and financial news. And tell us in the comments. Do you think banking reform is simply modernization, or could it eventually become part of a much bigger currency story? Stay informed, stay cautious, and always verify before you act. This video is for educational and informational purposes only and is not financial, investment, tax, or legal advice. Banking reforms, regulatory changes, digital payment developments, foreign exchange policies, or financial sector modernization do not confirm a specific Iraqi dinar or Vietnamese dong revaluation, exchange rate, or RV date. Always verify information through official financial authorities and qualified professionals before making financial decisions.